Weekend is here and so is your one-stop show on corporates and startup world updates, Companynama. I'm Shrestha Tiwari. Over to this week's updates from the corporate world first. The merger of the country's largest private bank, HDFC Bank, and its parent company, HDFC Limited, has been approved by NCLT. According to K.K. Mistry, Vice Chairman and CEO of HDFC, the merger process of both the companies is expected to be completed by the end of July 2023. Let us tell you that on April 4th, 2022, HDFC announced the merger with HDFC Bank. The approval of RBI is yet to be received, for which the bank has also sought some concessions, and RBI is believed that will give these concessions closer to the merging date. Moving on the other news, RBI has fined HDFC 5 lakh rupees for not complying with the rules of a National Housing Board. Ramesh Chauhan's daughter Jayanti Chauhan will steer bottled water company Bisleri International. This comes after Tata Consumer Products dropped its plan to acquire the bottled water company. Jayanti Chauhan is the chairperson at the company, promoted and built by her father Ramesh Chauhan. As per reports, she will work with the professional management team headed by Chief Executive Angelo George. Ramesh Chauhan had earlier agreed to sell the brand to the Tata Group for an estimated 7,000 crore rupees. Tata Consumer called off the deal, attributing it to indecisiveness. Tata, on the other hand, will now invest heavily in its own water brands Tata Copper, Tata Gluco and Himalayan. Reliance Industries has announced the launch of a range of home and personal care products. While the company did not disclose the price points at which the products are being sold, sources say that they are at significant discounts on the existing products. This is a pan-India launch that its subsidiary Reliance Consumer Products is undertaking through mom and pop stores across the country over the coming months. Canadian pension fund CDPQ is in talks with American Tower Corp to buy a 50% stake in its Indian unit. The Boston-based ATC has offered to sell a 50% stake in its wholly owned Indian subsidiary. ATC Telecom Infrastructure Private Limited, both CDPQ and KKR and Co. had earlier submitted non-binding bids, but the latter is believed to have gone slow, while the Canadian investor has initiated detailed diligence work. The valuation of the Indian arm is pegged at $1.5 to $2 billion. According to several media reports, Amazon.com is in advanced talks to acquire MX Player, the video streaming platform owned by Times Internet. Amazon reportedly has appointed one of the big four accounting firms to perform the due diligence procedure to buy MX Player. The process might take 30 to 40 days to get completed, according to the Mint. As per sources, earlier Times Internet was asking for over $100 million for MX Player, while Amazon's internal team valued it at around 500 crore rupees. After the due diligence report, if everything goes well, Amazon would acquire MX Player for about 600 to 900 crore rupees in the next 2 months. And the Shapoorji Pallonji Group, one of India's oldest business conglomerates, is undertaking a major restructuring by creating two holding companies to house its diverse businesses, ranging from real estate and construction to oil and gas, to be overseen by children of brothers Shapoor and Cyrus Mistry. As part of the reorganization, Shapoorji Pallonji will cease to operate as the holding and operating entity for the group companies. The two holding companies, SP Finance and SC Finance, will each hold 47.69% stake in the Shapoorji Pallonji Private Limited. N. Chandrasekaran, the chairman at Tata Sons, is reportedly discussing ways to engage outgoing TCS MD and CEO Rajesh Gopinathan with the group beyond September 15 in an advisory role. As per reports, there have been preliminary discussions between the two as the group needs reliable and experienced hands with its diversification into various technology domains. Gopinathan resigned last week with almost 4 years of his second term remaining. Hindustan Zinc Limited, the Anil Agarwal Group company, on 21st March declared a fourth interim dividend of 26 rupees per share, amounting to 10,986 crore rupees, a large part of which will go to its parent company Vedanta Limited. The dividend proceeds from HCL could help Vedanta to bring down its debt. For the quarter that ended December 31st, 2022, Vedanta held 64.92% of HCL. Vedanta will receive around 7,132 crore rupees from HCL as an interim dividend in the fourth round based on its shareholding. The Government of India, which holds 29.54% of HCL, will get around 3,245 crore rupees from the latest announcement. And now over to the segment that talks about major corporate controversies and disputes. Let's take a look at who was on the radar this week. Shares of Sobha Limited plunged a little over 6% on 22nd March as the Income Tax Department carried out searches at the real estate developer's registered office and other premises. The Bengaluru-based company has said that it is extending full cooperation to the tax officials. However, it didn't specify the reason behind the searches. On 22nd March, stock was trading at 6.19% lower at 487.10 rupees a piece at around 1:20 p.m. on the NSE. Ratings agency S&P has said good governance and funding information can help Adani Group improve its rating. It said that the group could be downgraded if any probe shows wrongdoing. This may include any undisclosed related party loans or misreporting. In other news, the Adani Group is seeking to refinance $1.15 billion of overseas listed bonds at two group firms, which is Adani Green Energy and Adani Ports and SEZ, via private placements. Multiple banking sources directly aware of discussions with potential investors. The group also said that it had stopped work at the 35,000 crore rupees Mundra project due to funding issues. And speaking at the CAPA summit, Adani Airport Holdings CEO Arun Bansal said that the company will bid more for airports in future. Councils representing Adishree Commercial, the largest shareholder, disputed before the NCLT, saying Stray Infrastructure Finance Limited and Stray Equipment Finance Limited could not have been admitted for insolvency proceedings. Councils raised that the date of default in SIFL and SEFL fell during the period suspended for initiation of CIRP under IBC Section 10A, and by inserting this section, the government had suspended fresh insolvency proceedings through an ordinance in June 2020. Further hearing in the matter will continue on March 31st. The Supreme Court on March 28th allowed lenders to Reliance Capital to hold a second auction of the insolvent company, upholding the orders of the Company Law Appellate Tribunal. This follows a petition by Torrent Investments filed on 4th of March challenging National Company Law Appellate Tribunal (NCLAT) decision to allow a second auction. The top court agreed to hear Torrent's plea last week, and the Supreme Court allowed bidders to participate in the auction for value maximization. The National Stock Exchange of India has been involved in a co-location case for several years now, and the Supreme Court has directed SEBI to refund 300 crore rupees to the NSE, which the exchange had deposited under disgorgement orders. The Apex Court also refused to stay the Securities Appellate Tribunal's order, which had struck down SEBI's disgorgement order. Well, those were all the updates from the corporate world. Now let's take a look at what went on in the startup world this week. Ola Electric is looking to raise $300 million from West Asian and US-based global private equity funds at a $7 to $8 billion valuation. This move will dilute the shareholding of the promoters marginally from 40% currently to around 37 to 38%. Once the deal is through, SoftBank, the first investor to invest money in Ola Electric, will see its equity diluted to below 20%. EdTech Decacorn Byju's has reportedly offered to increase the interest rate on its $1.2 billion term loan B as the company renegotiates debt financing arrangements. According to sources cited by the Economic Times, the EdTech major might finalize the new debt structure with a 200 to 250 BPS increase in interest rate. The EdTech giant, which has been on a cost-cutting spree recently, raised the TLB in November 2021 at LIBOR plus a floating floating interest rate of 550 BPS. Byju's is now looking to add to this interest rate, which would take the total floating interest rate to 750 to 800 BPS. As the edtech giant continues to negotiate to restructure its debt, it is looking to raise up to $500 million via convertible notes. However, the size of the funding is still subject to change. Home renovation and interiors platform LiveSpace has become the latest startup to lay off employees by bidding goodbye to almost 2% of its overall workforce in a bid to drive profitability by the financial year ending March 2024. The Singapore-headquartered startup informed the impacted employees about job cuts through emails sent on March 17. The retrenchment has affected 45% of its technology and product teams. In FY22, LiveSpace reported a loss of 645.2 crore rupees, whereas its sales stood at 570 crore rupees. With that, it's a wrap on this week's Companynama. See you again next Saturday with more from the corporate and startup world. Meanwhile, do watch other weekend specials of Money9, FinoMoney and Taxing Times, and stay tuned to Money9 and have an amazing weekend.